Welcome to 1% BTC, where we help you upskill your knowledge on investing and all things Bitcoin. Now, today we're going to have a quick news update of some of the biggest movements in the Bitcoin and crypto space. And I'm your host, Dominic, and this is David.
Right.
So, what are the key big news events? Well, considering that in our last video, we spoke quite heavily about gold, I thought it would be a good time to actually talk about some of the changes in that market. Now, the very first thing is that the gold market has cooled off a bit. We steadied around $4,000 an ounce. And what's interesting is that at that exact moment, China decided to end a key tax rebate for gold retailers. Basically, there was a VAT offset, which basically was a kind of tax exempt status that was applied, and it was 13%. They've now lowered it to 6%, and that applies for jewelry and industrial gold sales. Now, instantly in the aftermath of that, Chinese jewelry stocks fell. So I kind of see this, and you can sort of put your speculative hat on, as China trying to cool off the gold market before the price runs away too quickly, and before they can continue their accumulation. In the last video, we saw that they had huge amounts of accumulation over the past few years.
That's interesting, because I think the Chinese population has always been one of the largest purchasers of gold and acquirers, and they save gold like crazy. It's part of their culture, and historically they've done it, as well as India. What do you think the rationale is for the government to be able to kind of cool off, like, because the Chinese government is also acquiring huge stakes in gold, and they're opening up, as you'll kind of probably talk about, the kind of gold corridor. So what does this mean? Like, what do you think are the drivers behind this current change?
Well, I'm purely going to go on a speculative basis, but if I put myself in China's position, I'm putting in all these different avenues to ensure that I'm able to accumulate gold and eventually move away from the US dollar. The US dollar has been weaponized, specifically under the Biden administration, where they confiscated Russian assets. I, as China, would rather have an asset which is to some extent unconfiscatable, and which I can use in many ways to rebuild the world order post any kind of debt spiral, debt problem. So I think if I put myself in China's shoes there, what I'm looking to do is show that gold has value, continue to let the price of gold increase, but I don't want it to get too overheated, meaning I don't want all retail to jump in too quickly, because what it would mean is that I'm then having to buy gold at higher prices. Right. And there's nothing that we've seen recently that indicates that China is slowing its gold purchases or its gold mining acquisitions. So just my speculator's hat on, I think that could be it. But obviously, who knows?
But as a Chinese government, I would want to protect my economy and my population against, the debasement of fiat currencies, right? And I want to encourage more purchasing of gold, while at the same time, so it's a balancing act. They don't want the price of gold to just skyrocket, but they also want to protect their economy, right?
Correct. Gold and Bitcoin, to some extent, are basically mirrors to the financial system. Financial system which is leveraged up on debt and which relies on continual money printing and debasement. If you've got hard assets like gold, if you're China, eventually you want to, it's in your benefit to move to a gold standard or some similar system. But do it too quickly, people lose faith and they start to cash in every renminbi or every US dollar they can. Now, considering China is one of the biggest holders still, even though they've been decreasing their holdings of US treasuries, it's not in their benefit to make that rush too quick either. So I think all of this is just laying the seeds. But once again, I'm not a fly on the wall within the Chinese Communist Party. I'm not entirely sure why they would have made this move. I'm just purely basing on speculation.
Interesting.
But what's interesting, and you use the key word there, is we had a record outflow of $7.5 billion from the gold market. Now, that's huge, but just put it in perspective, we had an 8.5 billion inflow just prior. So the total inflows over the past few months were $59 billion. Yeah. ETF demand jumped 134% in Q3 for gold ETFs, and that's about 229 tons. So year to date, you're looking at around 619 tons. So it's the strongest year of accumulation since 2020. Now, what's interesting about this chart is, why would you have seen this this huge wick downwards? And the putting my speculator's hat on again, what it does appear to be is long-term holders selling off into strength. So even though gold is seen as a hard asset, it's not immune to people playing these fiat money games. And when you've seen the gold market go up 50+% in 1 year, seems to me like it's a good time to take profit. And I think that's what we've seen. So gold has stabilized at $4,000 an ounce at the moment, but I think it's interesting. It's worth pointing out that massive sales aren't just only there in the crypto market and Bitcoin market. This does happen in what many consider to be the $5,000, the 5,000-year-old store of value.
Right. Do you think that, interestingly to see this chart, because what that tells me also, similar to Bitcoin, is it's still a market that's highly manipulated, right? Where the huge whales that are really affecting the market.
Correct. And think about it, $7.5 billion worth of outflows. That's a ridiculous number. That's an insanely high number. And for it all to occur in a 1 week period is extremely telling. Now, there are ways to manipulate the precious metal markets, and we know that big players like JP Morgan have done so with the silver and gold markets previously. But could this be coordinated? Yes. Could it be large players doing large scale selling in order to suppress the price for longer while they play their fiat games? Or could it just be large people that have been accumulating gold for years taking some off the table? Once the cascade started, it continued. We don't know. All we can do is base it on what the chart is showing us. So let's talk about the elephant in the room, which is obviously the Bitcoin market. We are a Bitcoin focused channel, even though we do comment on investing and the macro trends. But anyone, and I'm sure David will tell you, anyone within the Bitcoin space, as you can see from these charts, generally October and November have been traditionally good months. And yet that's not what we're seeing at the moment. At the moment, what we're seeing is Bitcoin drop from 112K to 106K this week. Huge amount of long positions liquidated, which I'll go into on the next chart. But essentially, we're still waiting for our Moonvember. We're still waiting for prices to blow up. What I would point out is that a 5% drop and a 3% drop in October is nothing once you've been in the game, in the Bitcoin game, for years. Not when you've got sometimes 15% growth within a single month, or 20%, or sometimes 30% growth within a single week. So just stay humble, keep stacking sats.
Yeah, as you said earlier today, off camera, you were saying that, like, I was quite disappointed and disheartened with the recent drop below 105K. And you're like, I'm not. What did you say?
I said I'm not. I was stacking.
That's right.
So I think, bear in mind, Bitcoin has spent close to 200 days across 100K now. And we spoke about it in the last video, but essentially at every price level, so $1 to $10, $10 to $100, $100 to $1,000, $1,000 to $10,000, and $10,000 to $100,000, it spends around anywhere from 300 to 1,500 days. That 200 days that we have spent above 100,000, to me, is setting a price floor. Now, bear in mind, and I'll talk about this in this slide, bear in mind that a couple of weeks ago, we had the biggest liquidation event in crypto history, which was sparked by US supposedly hiking tariffs on China to 100%. We had $19.16 billion, which, as you can see from this chart, is more than double that of the AML crackdown and mining haul that happened in 2021. So it really was substantial. It was absolutely massive. Now, this past week, where we've seen prices drop again, we had another liquidation of around $1 billion, just over $1 billion. Actually, I think it was 1.2 billion. These liquidations do happen, but the fact that we are still comfortably above 100,000, I think, is setting a nice price floor.
I think you're right. That's a really incredibly important support level of 100K, psychological support level.
It is. So let's see if people agree with me, though. I'm saying that I think it's a nice support floor. Unfortunately, what we're seeing on Polymarket, which is an online cryptocurrency betting platform, the odds that Bitcoin will drop below 100K have gone over 50%. Now, historically, Polymarket has been relatively accurate. My point is, even if we do drop below 100K, I think it will be short-lived, because I think that the bulls will come in and buy up anything under 100K. I think they will see it as a buying opportunity, and I know I certainly will.
Exactly.
And let's not forget, if in doubt, zoom out. So this is the 11 spot Bitcoin ETFs within the United States. They're the biggest in the world. And what you can see is that last week we had significant outflows in Bitcoin. You had over almost 4,000 from BlackRock, 1,500 almost from Fidelity, continued outflows from Grayscale. I mean, all across the board, it was pretty much outflows to the tune of around 7,000 Bitcoin. Now, that seems massive, especially in financial terms when you're talking the billions of dollars. But as you can see, the week before we had 3,000 in, 11,000 out, which is when we had the huge liquidation. But the week before that, 22,000 in, and the week before that, 27,000 in. Just to put it in perspective, 450 Bitcoin are mined a day. So these are huge inflows. And this outflow that we had experienced over the past week is very minor. Those ETFs over the past 2 years have swallowed up over 1.3 million Bitcoin, and they're not slowing down. Wow. So as I always say, if in doubt, zoom out.
So the Bitcoin on the exchanges is running out. Really, that's like how are these purchases happening? Because are these OTC? Like, where is this? How are they acquiring their Bitcoin?
Well, that's what we're going to come on to. So there's a couple of things to bear in mind, because you raise good points. It's a couple of ways that ETF providers can attain Bitcoin. There's two key ways. The first one is to go out and use centralized exchanges like Coinbase, like Binance, to purchase Bitcoin. The trouble with doing that is if they're buying at scale and that exchange doesn't have enough sellers, you can start to see large price increases in the price of Bitcoin, which obviously isn't advantageous to those ETF issuers. So what they may do is buy OTC, which is over the counter. The simple way is there are these marketplaces you can go to where you can list your Bitcoin. If you're, say, a large whale who's got 10,000 Bitcoin, you could list that you've got 100 Bitcoin for sale, and you could say, right, the price is currently 106,000, but I'd be willing to sell it for 108, 109,000. The benefit to you is that you can sell your Bitcoin holdings at a higher than market price. The benefit to the ETF providers like BlackRock and the big players is they can accumulate Bitcoin without moving the needle on the price. So they pay a slight premium for it, but they can make sure that they can accumulate at a relatively low price.
What I don't understand is why this doesn't impact the price if it's OTC. So this is still on chain, right? This is still tracked on the blockchain.
So I would think about it this way. If I decide to sell you something in cash, I've got two options. I could use, say, a bank account, and I could send it to you, and it's tracked and everything is within sort of one space. The bank has an idea of what transactions are and where, or I could do it privately between just me and you with cash. Now, if I'm doing it privately, where I'm just going and selling you something and you're giving me the cash, there's no record of that. So yes, there has been a movement in that asset. There has been a movement in the cash value of that asset, but it's happened off the books. So that's the way I would think of the OTC desk. It's happening off the books.
Got it. Yes.
But
Yes.
you're right. And I think that that's one thing that we will touch on in possibly our next video, is talking about those OTC balances and those exchange balances, because they have been decreasing over time. Now, if you wanted to, sorry, go on.
No, I agree. It'll be good to learn more about that, but maybe in another video.
Absolutely. Obviously, if you want to visualize the extent of the sales, you can see that comparatively compared to the inflows that we've had a couple of weeks ago, the selling that we've experienced on the far right is actually relatively minor. So once again, if in doubt, zoom out, because the big players are continuing to accumulate at a rate far higher than the mine supply.
Yeah. And now, this is also a shift, because I think in the after COVID, in the 2020 up to 2023 and 24, it was mainly the retail investors that were pushing the prices up, right, of Bitcoin, and they were piling into Bitcoin like crazy in crypto. But it was since the launch of the Bitcoin ETF, spot Bitcoin ETF, that we saw institutions, and now they're the majority of kind of purchasers of Bitcoin in the markets, right? So that's why we're seeing more kind of volume, but also it's more institutional buying than retail.
Correct. We really have seen that shift. Now, obviously, people have said, well, if institutions are bringing in so much more money, let's put it in perspective. It's far easier to convince a billionaire to put in $1 million than to convince 1 million retail investors to put in $1.
Yeah.
It's so the real money is there with the institutions. Now, some people have come to us, myself and David, and obviously, as David alluded to at the start of the chat, was, why isn't the price moving? Why can the price be going down if we're still seeing inflows, institutions buying, etc.? And part of the reason, I believe, is that because it was a retail-led market, you've got huge Bitcoin whales. So by whales, we mean people with a substantial amount of Bitcoin, over 1,000 Bitcoin, 10,000 Bitcoin, etc., who are taking some lifestyle chips off the table. And they will happily make over-the-counter deals with BlackRock for two reasons. One, to diversify, which makes sense, even in the Bitcoin space, to diversify into other assets. And two, is to take advantage of the BlackRock and other financialized Bitcoin products. So BlackRock now allows in-kind redemptions, meaning that if I have Bitcoin, I can go and give it to BlackRock and they will give me shares of IBIT. Now, what that enables me to do is, in the future, it's a lot easier to attain entries to the legacy finance space, such as collateralization, lending, etc., with IBIT than with Bitcoin kept in, say, a hard or cold wallet. So if I've got it in a cold wallet, yes, I've got custody of it, but it's going to be far harder for me to obtain a loan against that collateral unless I transfer that collateral over. But obviously, if I go to IBIT and give them the Bitcoin, on paper now, I've still got a claim to that Bitcoin, but I can now use that to maybe attain lending, which I can use to buy more Bitcoin or fund my lifestyle, etc. So that's potentially a reason why we're seeing huge whales sell into the market. And I haven't got a slide on that today, but I think in the next video, I've got a slide which will probably back that up.
Yeah, I mean, there's a great famous example of someone, a big whale, that has done that. So Plan B has converted, well, he says, we don't know, who knows if it's true, has converted all of his Bitcoin into a spot Bitcoin ETF. And maybe it's for the same reasons, that he can then leverage that money and borrow against his Bitcoin to do a lot of other things.
Absolutely. I mean, how much wealth do you need to get to before the risk of a $5 wrench attack, so someone coming and attacking you because they know that you've got Bitcoin, At what stage do you have to get to before you think maybe I should, diversify and take some off the table in a way that someone, if they were to kidnap me, wouldn't be able to get. So I think that it's all part and parcel with the space maturing.
Yeah.
But what are we seeing? Talking about our friends at BlackRock, they've just announced that they're going to launch the a exchange traded fund within Australia. So obviously they've had such success with IBIT that they're now eyeing an ASX launch in mid-November at a cost fee of around 0.39%. So the cost basis for the IBIT is around 0.25%. So they're going higher, but essentially this will be really attractive to the Australian market. We do currently have ETFs, but I think that bringing BlackRock's name to the game and just the sheer weight of and security that comes with it, I think is something to behold.
So of the 11 providers that you highlighted in a previous slide, do Australian investors have access to those 11 ETFs, spot Bitcoin ETFs?
So we can buy them through the indirect. You can buy them, but it's not easy. You have to go through certain brokerages, such as Stake or I believe ComSec, where you will pay higher fees to have access to foreign markets, say the US market. So having access to a Bitcoin ETF within your own country, even if its fee is slightly higher, will appeal to many, many Australian investors, Bitcoin investors, I believe.
That's excellent. Yeah, I mean, I'm waiting for that here in the UK for BlackRock to offer a similar product, because it's not easy to access these types of products, especially from the premier bank like BlackRock.
Well, it's funny you should say that, waiting in the UK, because as BlackRock has been eyeing Australia, Fidelity has been eyeing the UK. So Fidelity gained FCA approval, so the Financial Conduct Authority, to offer physical Bitcoin ETP. So an ETP is it stands for Exchange Traded Product. It's very similar to an ETF in its main function. So this will be the first crypto asset available to retail investors, as far as I'm aware. And it will be available on Fidelity's UK platform from today, as far as I'm aware.
Excellent.
I might need to check that source, but from what I could find, they're moving very quickly to make it available to retail.
Fantastic. Great news.
And look, let's just zoom out. So even though we've seen the ETFs sell off over the past couple of weeks, even though we've seen the price of Bitcoin go down from a record high of over 125,000 US dollars to now around 106, the number of entities, whether it's governments, public companies, ETFs, etc., holding Bitcoin has still grown over the past 30 days. So there were 348 tracked entities, and we've increased by 5 over the past 30 days. So it's continuing to increase. Wow. Now, in terms of another way of looking at that is how much Bitcoin do these entities actually hold? Now, in total, we've got around 4 million Bitcoin, which, to put it in perspective, is what, 20% of the supply almost? Wow. And that's not including lost coins or things like that. So that's between governments, public companies, ETFs, and that's growing. So even in the month where we've had, let's call it Downtober, we've still seen a 4% increase in the amount of Bitcoin that these large players are accumulating. And look, you can see the ETFs now hold over 1.5 million Bitcoin, which arguably, if we've got 6 million lost coins, up to 6, which there are some theories we do, is over 10% of the supply. Public companies, which obviously include things like MicroStrategy, Metaplanet, etc., got over 1 million. Private companies, over 250,000. So the accumulation is continuous. Yeah, and it's unrelenting. So I would just say, watch what they do, not what they say. And from what I'm still seeing is that while this time where retail is scared and losing interest, you're still seeing large accumulation by the big players.
That's incredible. I know for the ETFs, Is it IBIT holds upwards of 802,000 Bitcoin alone, and of the total amount of holdings of ETFs, I mean, they're the big winner, right?
Absolutely. I mean, they're absolutely dwarfing all other ETF providers. The rate at which they're swallowing up Bitcoin, I'll have to provide some stats on that in the next video, but it's a significant amount. And to have them come from a space where they were declaring it as a scam and a Ponzi to now rapid accumulation, it being the most successful ETF of all time, as well as the most profitable ETF based on that 0.25% fee. The incentive structure is there for them to continue to do this.
Wow, if it's 20%, I mean, that just makes you think, if there's a cap of 21 million and this is 20% has been gobbled up, right? And there's an estimated between 4 and 6 million Bitcoin that have been lost forever. It makes this so scarce, and it's quite, you know, with was it 9.6 or 9.7 that have 19.6 or 7 that has already been mined. Is that right?
Yeah, it's around that. Let's put it in perspective. So, because I think I know what you're getting at. So let's pretend there are no lost coins. There are 21 million Bitcoin there will ever be.
Okay.
So based on this chart we're seeing in front of us, if they do own, say, 4 million coins between these entities, that's 19% of all the Bitcoin there will ever be gone. If we take into account those lost coins, that's 26%. So over one in every 4 Bitcoin could hypothetically be off the table forever. And these large players don't necessarily behave, and this remains to be proven, but they don't necessarily behave in the way that retail do. Retail accumulate assets with the intention that they one day sell them to fund their lifestyle. These large players don't necessarily need to do that, because what they can do is borrow against their holdings, and those structures are coming into place at the moment. We've seen JP Morgan start to offer collateralized lending against Bitcoin, which means that the incentive for them to sell in an asset that continues to increase in value, if it indeed does, is far less. So this accumulation, from what we're seeing in the background, 4% increase over the past month, is signaling that. It's just signaling relentless, non-stop accumulation.
Incredible. Great slide.
Thank you. So, and our favorite, Michael Saylor, as we said, can't be left off the board. In our last video just last week, I pointed out that he'd done a Bitcoin acquisition. He's done yet another one, 45 million. In fact, I think it's 47.5 million was what I could find. So around 397 Bitcoin at a price of around $114,000. And this is what I mean. This is a perfect example of what we're just talking about. Saylor does not care at what price he accumulates at. His average buy price for all of his Bitcoin is 641,000, is $74,000. And every purchase he now makes increases the average buy price. Most of us, like David and myself, try and make sure that we're lowering our average buy price whenever possible. Saylor is a perfect example of one of those entities that will continue to buy Bitcoin at any cost.
I remember the day when he started accumulating Bitcoin in August 2020, when his average buying price was about $17,000, $16,000. You know, and that was incredible. The profits that he was making billions in profits at that price, because he had billions of holdings, but billions in profits as well. So to see this average cost 74 is just astronomical. And he's quoted as always, when someone asked when will he stop buying, and he said, I will never stop buying the top.
Yeah, and I believe him as well.
Yeah, but with a share price of 264, you're not seeing the appreciation, even though he's accumulating week by week of his Bitcoin holdings. That the share price is being decimated.
Absolutely.
Why do you think that is? Maybe we could talk about this in another video. But why do you think it's not the Bitcoin treasury companies are not matching the appreciation of Bitcoin?
I think there's a couple of reasons. I think AI is playing a huge part when you've got Nvidia becoming the first $5 trillion asset, and you're looking at huge runs in assets like Tesla, Nvidia, etc. Obviously, that's going to pull some of the steam out of the room. I think also oversaturation of the market. So when Saylor first launched his strategy, he was the only Bitcoin treasury company. Now, as we saw in the previous slides, he's one of many. So every Bitcoin that goes into a different company, sorry, every dollar that goes into a different company doesn't go into strategy and MicroStrategy. So I think that there's a bunch of reasons. I also think personally that it's short term. I myself hold MicroStrategy. I'm continuing to accumulate, especially at these reduced levels. It starts to look pretty nice to me. And I think as long as the core thesis hasn't changed, which is he's continuing to accumulate, even at prices of 106,000, he's still around 43% in profit.
Wow.
So he continues to just increase his Bitcoin holdings. So yeah, I think one for another video, but I think that short-term pain for me. And when I say short-term, I mean, I think in terms of years. So yes, this could last months, years. We could have a black swan, multiple black swans where the market drops for unforeseen circumstances. Strategy particularly is seen as a risk asset built upon a risk asset, which is Bitcoin. So I think that TradFi, you will see those companies selling off. Sorry, some investors selling off in relation to that. But I think long term, it's almost impossible for any other Bitcoin treasury company to repeat what Saylor has done or to catch him in terms of the amount of Bitcoin he has. Yeah. So I think long-term thesis, I still see strategy as a good buy. And like Michael Saylor continues to accumulate Bitcoin, I will be putting aside a very tiny proportion of my portfolio to continue to accumulate strategy when it is below its all-time high values.
Well, I also share that conviction in MicroStrategy or in strategy. I'm a holder of strategy shares, and with their accumulation of 641,000 Bitcoin, I mean they're close to IBIT in terms of holdings. They're not too far off, right? So
well, they're pretty far off now. I mean, IBIT's gone over 800,000, so IBIT is well and truly in the lead. However, don't forget that strategy is a company. IBIT holds Bitcoin on behalf of. It's not BlackRock purchasing the Bitcoin. It's people using IBIT as a way to indirectly purchase Bitcoin.
Yes.
So MicroStrategy is still, strategy is still the largest, I would say, singular Bitcoin owner on the planet.
Yeah, but strategy is a 4-year lead on any IBIT or any ETF acquiring. So I think they've done well to get to that point.
I think they've done astonishingly well. The amount of risk that he took in doing so and foresight in order to see what he has is absolutely astounding. And in typical Michael Saylor fashion, obviously we spoke about last week how the S&P rejected adding MicroStrategy to the index, and how they actually graded MicroStrategy as B-, which is basically junk. The positive spin that Saylor has put in it, and I'm inclined to agree, is in terms of the capital that can be that is available. I mean, you've got 2.8 trillion in unrated, and then by grading them, they're now seen in many investors' eyes in the same bucket as this 4.9 trillion within the gradings of C to BB. So the way to look at it is that they, in many institutional investors' eyes, they've now moved up the ladder to be considered the same risk profile as the second bucket, which is 3 times larger than the bucket they were in, which was unrated.
Wow, they are as Saylor said in an interview on the day that S&P gave the rating. He said, we're very proud to be the first and only Bitcoin treasury company to be rated. That's an incredible achievement.
It is. And the question becomes, is it the first of many? And I think so. You've got to, in the same way that Saylor and Strategy were the first company to adopt a Bitcoin treasury strategy, the fact that the rating agencies are now being forced in many ways, hamstrung, into actually addressing these companies that have come out of nowhere and saying what they believe they are, is getting your foot in the door.
Yeah.
And just to show that Saylor doesn't stop, and we'll talk about this, we've got a slide on this in the next video by Adam Livingston, which really nicely breaks down what Saylor is targeting. But he's now launching a separate Bitcoin product in targeting Europe. So he's offering preferred shares. So think of preferred shares as like a hybrid security offering a fixed dividend, so a fixed payment. So it works kind of like a bond, but with ownership rights like a common stock. So in terms of payouts, so if anything ever happened to the company, the preferred stockholders would get their money back before the common stockholders. So this product is called STRE, and they're planning to launch it at 100 euros each. It's going to pay 10% annual cash dividend, and it's going to rise 1% per year up to an 18% maximum. So the way I want you to think about this, you've got your money in, if you have your money in a bank account, I want you to ask yourself, how much money do you receive from interest payments within that bank account? In the same way that you have your bank account, governments have many institutional investors and pension funds rely on bonds. Now those bonds will pay between 1 to 5% currently. So Saylor is targeting the fixed income market now within Europe. Yeah, and he's saying, hey, come to me, I'll give you 10% dividend on your cash in perpetuity, and I'll increase that at 1% annually.
Wow, that's incredible.
It's worth pointing out that from what I can see, UK and retail investors, so we had some good news for the UK, but with Fidelity, but some bad news for the UK. UK retail investors will be prohibited from purchasing this product initially.
Oh, really? Okay. Okay.
Yeah.
So let me understand this. So you're purchasing preferred stock of Strategy. So in addition to the 10% each year invested, it increases by 1 percentage point. You get the appreciation of the share price as well as the dividend.
Correct. So let's use the figures that he's used. So they're offering it 100 euro per share valuation initially. So let's say I buy that for 100 euros and the value increases by 10% that year. Well, initially the dividend, which I would have expected to be at 10 euros, would be the dividend at 10%. Well, because that has now, the share price has increased to 110, it's gone up by 10%. That dividend I can expect is now 11 euros. But the next year, that dividend increases by another 1%. So let's pretend that that stayed at 100 euros. Well, now the dividend next year is 12%, so 112 euros. So I get a 12 euro dividend instead of an 11.
Wow.
So yeah, it's a really clever product, and it's something that has followed his other products like STRF and STRC, which we'll talk about in a separate video about how Saylor is basically launching a subtle attack on the traditional markets.
Mm-hmm. What's interesting is these products, they seem new, but they've always existed, right?
Correct.
But he's just turning into kind of a printing machine it's a flywheel for buying more Bitcoin.
Correct. Correct. And yeah, it all goes into basically buying more Bitcoin and increasing the Bitcoin per share that MicroStrategy, so MSTR holders, will have as a claim to their share. Now, let's just compare this, because I thought this was some really interesting things. This is Berkshire Hathaway, so Warren Buffett, the Oracle of Omaha, one of the most respected investors of all time. As you can see, even though he's famously called cash is trash, he's been selling large amounts of his stock holdings over the years and just accumulating cash more rapidly and more rapidly. And the theory is that he sees everything is overvalued. Just to put it in perspective, around 50% of his portfolio is now in cash. So
50%. Wow.
Yeah. So a staggering amount. I think it's $527 billion worth of cash he now has in low yield products. So probably some bond. I'm not sure where he has it. Some
Treasury bonds. Yeah, exactly.
treasury bonds or etc. But paying a nominal amount, and obviously he's getting eroded by inflation. But he's willing to do that because he believes that the market potentially is going to drop. Obviously, we don't know what's going on in Warren's head, but we can infer something from the chart. And what this chart signals to me is a lack of faith in the stock market, and that he believes that in the future, whether it be tomorrow, next week, a year, 10 years, but there will be a substantial buying opportunity where fear will hit the market and he will be able to buy these companies at an extreme discount. So he's willing to put up with the lackluster returns in the meantime until we can get that. But what I wanted to talk about was his cash position is huge. However, this was very interesting from Adam Livingston. So this is the size of MicroStrategy's Bitcoin position, 4.5 billion. Yeah, Buffett's Q3, so I think he has them in treasury bills. So Buffett has, just pretend, 183 billion. Now, over 30 years, assuming a increase of around 2 to 6% on his holdings, and assuming Michael Saylor continues to add Bitcoin, this is the difference in terms of the value. And assuming a 24% CAGR, so compound annual growth rate for Bitcoin, wow, this is the value of those cash positions over 30 years.
Oh my gosh. Wow.
So what this is basically saying, and what Adam's trying to get at here, is that over those 3 decades, Bitcoin's compounding outpaces the fiat erosion by around 28 times. So making Buffett's current bet negligible.
Right, right. I think he has, the latest reading I heard was $383 billion in cash right now. Could be closer to 4 now, but 400. But it's ironic because Buffett classified Bitcoin as, was it Munger, as rat poison, right? And he wouldn't touch the stuff. He would short it if he had the opportunity. Bitcoin.
That's it.
Right.
And it's worth pointing out here, what we're talking about is if Buffett keeps that money in T-bills, which, sorry, I'm not sure if he actually does. I'll need to check on that. But essentially, with the current inflation rate, you'd be looking at 5% nominal increase. But after inflation, and this is just using the government's inflation figures, you're looking at a 2% real value annually.
Wow.
Yeah. So this is assuming 2% increase for Buffett and a 28% increase, sorry, 24% increase in the value of Bitcoin, which is finite and can't be debased. And it just shows that because the S&P doesn't treat, I think one of the things they actually said when they rated MicroStrategy was they made it very clear they treat it as Bitcoin as a risk asset. They don't treat it as a currency or money. But this chart obviously assumes that we do, and you can really see that the value, as Adam puts it, is immense over 30 years compared to the value of Berkshire's holdings in cash.
Right. Do you think there's ever going to be a shift with Berkshire Hathaway in moving into Bitcoin in the near future?
Near future, possibly not. I know that that Warren isn't oblivious to the money printing and the debasement that is going on. He specifically called it out in his retirement speech. He didn't specifically mention Bitcoin, but he did talk about debasement as a problem. He has also described gold as a pet rock. So he doesn't see these non-productive assets, as he calls them, as good investments. However, I think that when you look at the stats and when you see that if you'd have invested in gold 30 or 40 odd years ago and invested in the S&P, your gold would have actually outpaced investing in a broad S&P index. So Just because someone has experienced record gains, don't forget Warren is in his 90s.
Yeah.
Berkshire Hathaway has operated under a singular vision for the entirety of its life. And that vision, now that he's retired, may change, but with the investors like that, probably not. You're seeing the share price of Berkshire Hathaway has decreased massively because maybe, just maybe, that strategy that made Warren so wealthy and made him the Oracle of Omaha has become outdated.
Yeah. Yeah.
But only time will tell.
I know he is indirectly he has minor indirect exposure to Bitcoin by, I believe it's Nubank. That's a Brazilian digital bank that offers crypto trading to customers. So he invested about $1 billion back in 2021. This is quite early, but he himself is not invested in crypto.
I mean, Charlie Munger, his partner in crime, just described it as rat poison squared. He said it was a terrible thing. And what I would say is to anyone who, I have immense respect for Charlie Munger and for Warren Buffett, but what I would say is maybe compare the performance of Berkshire Hathaway over the past 17 years to the performance of Bitcoin and make your own decisions.
Yeah, yeah. Great.
So let's just finish up with a couple of slides. Unfortunately, we touched on retail interest in terms of Google searches for Bitcoin. It stays lackluster. Now, obviously, in the previous slide, we showed you how institutions continue to just swallow up significant amounts of Bitcoin. Unfortunately, since the sort of 2021 peak and the mania that followed the beer virus, we've essentially still seen lagging retail interest. It did start to peak around 2024, but it's basically remained very steady. Now, this is turning the tune onto some more worrying signs. Just got a couple of things in here. Now, there's this thing called the reverse repo market. Now, this is when the Federal Reserve, which is the central bank of the USA, think of it, it lends cash to banks in exchange for US Treasuries. It temporarily drains liquidity out of the system. Now, what I want you to draw attention to here, and what you can see in this terrifying chart, in my opinion, is just this week, they've had $24 billion injected. Means banks redeem treasuries for cash. It basically adds liquidity back, but it screams to me that the banks might be in trouble. To put it in perspective, these injections before have often preceded instability or rate stress. So suggesting the Fed is quietly backstopping liquidity needs. So rather than just out and out money printing, they're kind of using backdoor methods such as the reverse repo market to ensure that these banks are kept up. And what's even more terrifying is just look at the past 5 days. Over the past 5 days, you've got 125 billion in liquidity entered the banking system. Did it make the news? Not necessarily, not the mainstream news. Is it, just looking at this chart, is it a massive thing? Absolutely. Absolutely. I know this is just a 1 month chart, but you can see the size and the scale of those moves. It's absolutely immense.
That is worrying. Wow. Yeah, that wasn't covered, at least in the UK. I didn't see news of this at all. Definitely a backdoor injection. Wow.
Absolutely. And so this is one thing that Dave and I are going to be keeping an eye on. And apologies, the headline on this slide is incorrect, but it's definitely correct on this one. So another piece of worrying news from around the world, and possibly in response to what many consider to be the debt spiral that the world is now in, with the US in $38 trillion worth of debt and the world in over $300 trillion worth of debt. Governments are basically looking for any way they can continue to get money in the doors to fund their programs. Now, what France has now proposed is a tax on what they're deeming as unproductive wealth. So by this, they think of things like Bitcoin, gold, art, yachts. And what they're saying is they're going to have a unrealized capital gain where it would tax you 1% annually on your net assets above 2 million euros. So if you've got 2 million euros worth of Bitcoin, they will tax you 1% for any increase annually. So imagine that Bitcoin goes up, imagine it doubles in price to from say, imagine Bitcoin is 2 million euros and it doubles over 1 year to 4 million euros. You will now be taxed, even if you don't sell that, at 1%. So that would be $400,000, $40,000, if I've done my math correctly, that you would be at 40,000 euros that you would be taxed just for holding that annually, regardless of if you sold.
That is crazy. I can't even comprehend that, being taxed on something, an unrealized gain. So you haven't sold, there's no kind of tax event triggered. So how are they possibly going to pass this? And does this exist already, I wonder? Like,
well, I think,
yeah.
Sorry, go on.
No, I'm just thinking anywhere in the world, like if they were to launch it in the UK or the US, you'd have riots.
Well, I will come on to that in a second because I've got another example to interestingly chat through. But this unrealized crypto gains tax or unproductive wealth tax, obviously they haven't explicitly called it a crypto tax because it hits different assets. But currently, it's a 30% tax rate on realized profits, meaning when you sell, you pay a tax, which makes sense. You've profited from the capital gain of that investment, and now you're ready to sell. You pay something to the government. Yeah. But now this, in my eyes, is going to punish savers. So for making smart financial decisions and saving your wealth by accumulating assets, you're going to be punished, meaning you're going to have to sell, sometimes just to pay the tax, and then you'll incur an additional tax on top. It's going to force crypto sales as a result. And it sets a worrying precedent worldwide for a country as first world as France to start taxing paper profits. So profits that you've made on paper, you haven't actually made the profit in my eyes until you've sold and you've actually got the dollars, the euros in your bank account. So yeah, pretty worrying. But to your point, here's another example. So Australia this year under the Labour Party proposed a unrealized capital gains tax on super. Now, it worked exactly the same way. So superannuation, for those of you that aren't Australian, is basically a form of pension. And what they said was exactly the same thing, was that once the value of your holdings surpasses $3 million Australian, so about $2 million US, you would then have a unrealized capital gains tax applied every year. Luckily, the Australian government has now backed down from this because it received so many people writing it, so many people signing a petition to say, please don't do this. And so my understanding is that they've now implemented a new thing, which is 30% tax on $3 to $10 million balances and 40% tax above 10 million. Once again, only when sold.
Yeah.
So only when you take the gain, which to me makes perfect sense. The point that I'm trying to make here, and with the next slide as well, is that governments are going to become increasingly in need of more cash. So you're going to continue to see taxes go up. You're going to continue to see them push through unrealistic and very unpopular ways of getting more taxes through the doors. So this is another one. Rachel Reeves from the UK Labour Party is considering a 20% tax on assets of people deciding to leave the UK. So governments will not want their taxpayers moving to more favorable jurisdictions, because every taxpayer that leaves means that there's less money coming in and less money for their agendas. And so what they'll try and do is convince you to stay by saying, hey, that's fine, you can leave our country, you can move to places like Dubai, which have no income tax, no capital gains tax, etc. But we're going to take in this case, 1/5 of what you hold, your total assets, when you leave.
That's crazy. Wow, I didn't realize that.
Now,
yeah, there's a huge outflow of UK citizens going to places like Dubai, in kind of tax havens. So this is going to really, I wonder how serious the UK government is about passing this.
I think very serious, and they're trying to put it in place. If you read the headline, from what I can tell, is they're trying to push it upon other G7 and possibly G10, 20 countries. So expect something similar like this to come to Canada, Australia, New Zealand, the European Union, if it hasn't already. Now, the UK is, as David correctly points out, is in a very precarious position because they've seen the highest amount of millionaires and billionaires leaving the country out of any country. Now, I don't have the exact figures in front of me, but what I can say is that when you've got more millionaires and billionaires fleeing your country than communist China, you're probably not doing something right, and you're probably moving into authoritarian, taking some authoritarian or dystopian steps to make your wealthiest taxpayers leave. And that's the saddest thing about this, is that those with the means to move will move.
Yeah.
Those that don't have the means to move will stay because they have no other option, and yet there'll be the level and the quality of life they receive will continue to drop because, believe it or not, the people that pay the most taxes and bring in the most revenue for these countries are the top 1%, are the top 10%, are the top 20%. Those are the people that will leave. And that's the problem that the UK, through their authoritarian policies and poor forward planning, has now got themselves into.
That's crazy. Oh, and this also is on unrealized gains, right? This is just the value of tax of their assets.
Correct.
So you haven't sold any, but you're being taxed on just the value of what you hold. So again,
Correct.
your point, which I think is a great one, is it's discouraging people to actually save and to invest their money in hard assets that appreciate at a greater rate than really poor assets.
That's it. So let's imagine this. Imagine just pretend I've got I've got £20,000 in cash, and I've got a property worth £1 million. And let's pretend my plan, I'm retired, wasn't forward thinking enough to have a good pension, but I know I've got my house, which I can rent out, and I've got £20,000 in cash. I decide that I want to move to somewhere like Thailand, where my money will actually go further because of the strength of the British pound. And I want to live off that £20,000 for an extended period of time, as long as possible. In the meantime, I'm planning to rent out my house, in the UK, so that I've got money coming in, a strong currency. Well, with this, if the UK government decides to tax me at a 20% rate, well, that would mean that I would owe around £4,000 on the cash, and I would owe around £200,000 on the house. Now, I don't know whether this would apply to your primary residence, but because it wouldn't be their primary residence because they're moving out, how would they pay that? Their only thing they could do would be to sell the house, take the £200,000 hit, and then find somewhere else to put their money and fully move out to Thailand. So, yeah, it's a really negative thing.
That's insane, because in that example, you're not taking your money out of the UK and investing it in Thailand. You're keeping it in the UK, but it's discouraging you from kind of retiring in a lower cost jurisdiction, right? And
Correct.
enjoying your life. So I could see why this would be, implemented for kind of keeping wealth in the country, right? But if the person's retiring, there's no more money that they're going to be making outside the country that the UK wouldn't be getting. So,
Absolutely.
so it begs the question: so why are the UK even proposing it, apart from just raising exorbitant amount of money from UK citizens?
As I said, if you've got continuing, the UK deficit, I believe, is over 100% of their GDP, and that's going to continue to grow. They can't get out of this debt problem in the same way many countries that have got their debt to go to astronomical levels can't get themselves out of this problem. Now, what you can do is continue to kick the can down the road, and to do that, you need to make sure that you've got tax coming in, and you need to make sure that as the debt grows, your revenues continue to grow as well. And what that means is getting more tax in. Well, if you know that the biggest players in your little economy, the richest Brits, are leaving and taking all their wealth with them, that means that you've now got less wealth that you can tax. So therefore, what the UK government is trying to do here is send, in my opinion, a very strong signal to the wealthiest Brits and say, hey, that's fine if you want to leave, but we're going to tax the crap out of you before you do. So at least we've got some revenue that we can use to continue to kick the can down the road to offset the tax that we would have brought in from you and your activities and your assets if you had have stayed.
I think you're right. This is going to be a trend that's going to be increasing around the world as governments look to kind of pay down their debts.
And just to be clear, obviously I've mentioned about the Labour government in Australia, I've mentioned about the Labour government in the UK. Now, both of these are left-leaning governments. I'm not just targeting those governments, even though these proposals have come from them. What I am saying is that regardless if you are on the left or the right, these activities, such as capital controls, stopping money from leaving your country, increased taxes, and other such what we would classify as dystopian things, like what's being proposed in France around unrealized capital gains, and maybe increasing the pension age and things like that. These things, they have to do these things. It's not a question of if they want to. They have to, because the alternative is to basically make huge cuts to everything which many people in Western countries have become accustomed to. So things in the UK like the NHS, things like the military, things like social security or benefits. These things people would not tolerate and they would go out and riot against. So in order to make sure that at least on paper, people believe they're getting that money through the door, they will have to become more dystopian. They will have to continue to do these things. And I believe that the message for our viewers that I want them to take away is you need to start thinking about that now, because knowing that things are going to continue to get more expensive in nominal terms means that how do you protect your assets against that? So just on some positive news. So these are blockchain mentioned in SEC filings, so the Securities Exchange Commission. So basically any mention of blockchain related activities, this kind of gives us a health of the market. So how much is the blockchain and cryptocurrency sector, the Bitcoin sector, how much innovation is being put forward to the SEC? And as you can see, rapid increase over 2025. And you can see Bitcoin here in the light blue on the far right-hand side has remained very, very steady. So a lot of these companies and SEC applications, although it's being dominated by just blanket words like blockchain or cryptocurrency, Bitcoin and Ethereum mentions have also grown rapidly. So this is a pretty healthy sign in my opinion.
Interesting.
Also, just to wrap up, some other positive news. So the first state-backed energy company in Japan has now started mining. So as far as I'm aware, there are now 11, which I won't try and name right now because I don't have them off the top of my head and I wouldn't want to give false information. But as far as I'm aware, Japan is now the 11th country to endorse some form of state-backed Bitcoin mining. So as you can see, this is another way that countries can look to accumulate Bitcoin against the backdrop that we've just described.
Excellent. Wow.
Some other positive news as well. Swiss crypto bank Amina secures a MiCA license. So MiCA is a regulatory body, is a set of regulations that help manage crypto space within Europe. It's akin to the Genius Act, or sorry, not the Genius Act. It's akin to the, as far as I'm aware, the Market Structure Bill, which is currently on the table within the US, which is basically how crypto is managed within their jurisdiction. And so any bank that we see or any entity that obtains a MiCA license is basically opening up cryptocurrency and Bitcoin to certain investors. So this is all positive news. And the same thing with Hong Kong. So as far as I can tell, Hong Kong is going to let crypto exchanges connect to global markets, not just trade inside Hong Kong. This means more buyers, more sellers. So prices become fairer and trade happens faster. The goal, as you know, Hong Kong has kind of become the backdoor for China. Hong Kong is to make Hong Kong a top crypto hub, akin to Singapore or the US. The rules, as far as I understand, aren't fully ready yet. They're still defining it, and you're still getting sort of mismatching messages between Hong Kong and China. But it's my understanding, nothing happens in Hong Kong at this level without China's backing. So I think that the move that the US government has made in recent months around the strategic reserve, around confiscations of Bitcoin to continue their accumulation, and around these different bills such as the Genius Act and market structure. I think China's taking notice of that, and they are finding ways that they themselves can get involved in the Bitcoin space.
Yeah, this feeds into game theory. The more governments that start to hop on board and support, it's a race to get into the game.
That's it. And just to finish up, a couple of quick slides. So this is global money. So Bitcoin, from what I can find, has now reached around 2% of all global money. So if we're including gold in that, I think this is slightly outdated as well, because that gold number should be around 29 trillion. And obviously the Bitcoin number, I think, would have dropped slightly, but anywhere between 1 to 2% of global money, which is astounding. So this is the money that is in circulation around the world. So that is a really big milestone for an asset which only turned 17 this week. And that's one thing that we should say, David. Happy birthday to Bitcoin.
Yeah.
Because the Bitcoin white paper was released 17 years ago.
That's right. On Halloween, October 31st.
Halloween.
Exactly.
That's it.
Yes. Yes.
I don't have a slide here, but I'm not sure. Did you see Scott Bessent, the US Treasury Secretary, actually tweeted happy or posted an X about happy birthday Bitcoin?
I didn't see that. That's awesome. That's really incredible. Yeah. Yeah. So they're leading the way. The US is leading the way in supporting and adopting and encouraging. It's from a regulatory perspective, Bitcoin adoption.
That's it. I mean, the whole of we'll go into it in the next video. I think that would make a good video talking about the ties and links that the Trump administration has towards Bitcoin and towards the wider crypto market. I think that would make a very interesting presentation. Yeah. But one thing I do want to end up with is, obviously, David and I have, in this video and in our previous videos, have spoken a lot about and inferred some speculation around what we believe is happening. A lot of it is just speculation, because that's all we can do. We don't have a crystal ball. We can't know exactly why things are happening in the market. All we can do is look at the data, look at the facts, and give you our interpretation of them. And what I thought was great was I found this lovely little chart on the correlation of ice cream sales and shark attacks. Now, as you can see, that over the past year, they have gone almost perfectly in tandem. So I just want to remind you, correlation does not mean causation. So do your own research, make sure that you look into, check every single thing we're saying. Nothing that we've said is financial advice. We instruct you to consult a fiduciary. But aside from that, David, do you have any final thoughts, or any, want to avoid any purchase of ice creams in the next few months?
No, that's a great point you're ending on, because we are sharing our opinions and where we are putting our money, and we're investing our time and energy and protecting our wealth and actually growing it. So we've been involved in space for at least 8, 9 years, the two of us, and our combined knowledge and research in the space is, I think, second to none. It's quite good, but we encourage people to just learn as much as they can and to start that learning journey to make up their own mind.
Absolutely. And I think that's a perfect time to end it up, guys. So don't forget, you can follow us on Patreon, and we encourage you to sign up. Or if you'd like to book an appointment with us, you can go onto our website, 1percentbtc.com, and schedule an appointment with myself or David. The first of you to do that will receive a free consultation. And obviously, we'd be more than happy to chat with you or to help you on your Bitcoin or investing journeys. And don't forget, when it comes to Bitcoin and when it comes to investing, most will miss it, most will mock it, and most will wait until it's too late. But the 1%, they act with conviction.
Be a 1%er.
Thanks, guys.
Later, folks. Bye-bye.